Welcome, Nasdaq followers. I'm Karen Snow, head of East Coast Listings, and to kick off 2021, we've invited Betsy Atkins, former three-time CEO and current board member of Wynn Resorts, JAMP, and SL Green. Welcome, Betsy. Thanks for the time today.
It is great to be with you, Karen.
It's so great to have you again. So let's get started. Given that there are now over 12 to 15 trillion in assets focused on ESG, I thought we might focus our discussion on how companies are operationalizing their ESG programs. Does that work for you?
It does, and it's really way easier than people think. It's just a matter of codifying, capturing, and communicating all of the good things you're already doing. Every company has great HR policies of diversity, inclusion, equal pay. Companies have great supply chain policies of ethical sourcing and no child labor. Everyone has good security, data privacy, and are good corporate citizens with energy and water and electricity. So it's a matter of capturing it and communicating it. It's just get credit for the good things you're doing.
Right. And when you think about private companies versus public companies, who should be focused on ESG?
Surprisingly, private and public. It's interesting. I joined the board of JAMP, who went public on Nasdaq last summer, and is a very high-performing software company. And it's amazing on our first two quarterly earnings analyst meetings how many questions we got on ESG. So I actually think for private companies, preparing your ESG readiness is part of IPO readiness, because you're going to get asked. It's very topical. And also, as private companies, your venture capital investors and your private equity investors, they're limiteds, who are, university endowments and pension funds and sovereigns. All of those investors in your investors care about ESG. So I think it is time for both public and private to completely embrace ESG.
Very good point. And in your opinion, what external influences will speed ESG adoption?
It's very interesting how ESG all of a sudden picked up all this momentum. The interesting sort of catalyst was in Norway. Their big sovereign fund, Norges, was long a proponent of ESG. And about 4 years ago in 2017, the Japan Sovereign Wealth Fund, which is the biggest in the world, followed Norges. So in 2017, all of the index funds that we all know in the US that hold typically 70 to 80% of our stock. So that would be, Vanguard, BlackRock, Fidelity, State Street, T. Rowe, all those guys. All of a sudden, they had to embrace ESG if they wanted to sell their index funds to all the big sovereigns in Japan and Norway and Europe. So it exploded. And really from 17 onwards, it has been almost geometric. And, I think that it is now, sort of table stakes for companies.
And have you found that COVID has impacted the corporate commitment to ESG?
Such a good question. It really has. I mean, we all of a sudden cared even more than we already did about the welfare, the health, the happiness, the engagement of our distributed virtual employee base. So the S in ESG, wellness, inclusion, diversity became very important. And of course, we had a year of some social unrest. So community engagement became very important, or more to the forefront than it already was. So I think that the S and the G even more came into the forefront on ESG this last year. And E was already there with sustainability reporting.
Right. Let's shift to another S, and that's stakeholders. Are all stakeholders equally influential in driving ESG adoption?
So back in 2019, uh, everyone will remember the Business Roundtable,
Mhm.
who all unanimously signed this document stating they were moving from shareholder centricity to stakeholder centricity. So the stakeholders are, of course, your shareholders, your employees, your customers, your community. And when you look at ESG and who cares most, which is a really interesting question, um, definitely your investors care more than people would have thought. And boards are catching up on how important this is to investors. But your ability to attract your talent, your Gen Zero, your millennial talent, which is 46%, when you add up Gen Zero and millennial, they're 46%. If you want to attract and retain uh, your talent pool and your Gen Zero and millennial customers, and Gen Zero and millennial investors, you're going to need to embrace it. It's part of your brand halo, your mission, your vision, your purpose is part of your corporate culture, and how you operationalize ESG is implicit in that.
Mhm. And do you think there's any one specific stakeholder that has more influence or impact?
I think it probably varies a little bit by your industry sector. So, we saw topically in the news just the other day that Google employees are talking about possibly unionizing. So the S is really big there at Google. There's a high engagement. So maybe the S is more important there, but maybe if you're an oil and gas company, the E is more important. So your stakeholders, being your investors, they may care more in one part of ESG depending on your industry. So if you're a real economy manufacturing company in mining or chemicals or oil and gas, they may focus more on the E. If you're a services economy, it may be more on the S. But it's an interesting question you're asking though. Do the investors care more in certain industries versus your customers in a direct to consumer company? So I guess in a direct to consumer company, the S is so much intrinsic to your brand. It may be the stakeholders being your customers that you would index on more. But it's a very, I don't have a crisp answer, but it's a good one for us all to think about.
Yeah, it is actually. So, any thoughts around best practices or technologies that companies are using or should consider putting in place as they think about operationalizing their ESG efforts?
Yes, I think that first of all, you have to allocate a couple of headcount. And it's not a huge investment, it's a couple of administrators uh, who will capture all the good practices you're doing. And because it's noisy and confusing as to how you operationalize, because there are about 7 or 8 frameworks, and then there's an equal number of rating agencies. So a framework is something like SASB, which is the most widely adopted now. And Larry Fink at BlackRock has endorsed SASB, and it looks like that's going to be the winner. So you'd pick SASB, which has the uniqueness of tailoring what they report on by your industry sector. So, for example, if you're Facebook, reporting on your water usage is not really relevant. If you're a fracking oil and gas company, your water usage is important. Otherwise, you're, quote, greenwashing. So you would pick a framework, probably SASB, uh, which would give you the specific things that you should measure and report on for your industry. And then you would pick a rating agency. And it looks again like the predominant one is going to be MSCI. And you do want to tell your story because there is an algorithm web crawler from SASB that will sort of vacuum up the publicly available data on your company. And it'll give you a numerical rating. And if you don't tell the story, the algorithm is going to tell the story. And there's mistakes, and you'll do a better job of telling the story. All companies on the Fortune 500 now get a score from MSCI, and investors look at that. So you actually do want to do this because you don't want it to be done by an automated web crawler for you. You'll do a better job.
Yeah. And you mentioned that, head count, at least two people should be, allocated to this effort. What other kind of costs are associated with an ESG program typically, and how should companies think about evolving their reporting and where things are going in terms of additional resources potentially that need to be put behind this?
So if you don't know where to start, and many companies don't, one of the first things you should do is probably get a little professional advice. Uh, Forgive me for this shameless plug for Nasdaq, but at Wynn Resorts, Nasdaq has an amazing actual set of capabilities and scorecards and frameworks that we used, and some services. So, I would recommend getting a little bit of help. And then we picked our framework, we picked our rating agency. And it's important where you publish it. So it's very important to put, most companies have a sustainability report now, probably about 90% in the US. But now you have to do ESG reporting more holistically, in my opinion. So you would put it on your website. You would put it in your annual report. You would put it in your proxy, and you would put it in your CEO letter. And that way you're going to get credit with all your stakeholders, your customers, your investors, your employees. And, I believe it is really valuable. And, you don't want to be a laggard. You want to get credit for all the good things you're doing. And it's not a huge investment. It's going to be as important as any, board member and executive now knows they have to do proper cyber oversight and uses typically the NIST framework to report on. This is going to be as basic as, if you're a good fiduciary, you're reporting and doing oversight on ESG. And I believe it's equally going to be expected.
Right. And it's really part of your overall IR program, but you have so many stakeholders that actually care about it. It's so much more important. So lastly, where do we really think that the corporate ESG reporting is headed? And in particular, do we think that companies will get penalized if they have incomplete ESG reporting?
So I believe that we're probably maybe a year or two away from this being a mandated regulatory reporting requirement. The SEC last year was chirping and publicizing that they think there needs to be ESG reporting and it needs to be consistent. And so the thing that is holding it back from regulatory oversight is that there are these multiple frameworks and rating agencies that haven't come together. There's actually some very big things that are happening this year. The World Economic Forum has been having the big four accounting firms work together to come up with one common framework. It'll be like GAAP accounting, it'll be market driven. And it's based on all of the other frameworks. So if you had used SASB and 3 other frameworks that you were already reporting on, you didn't waste that effort. The sort of inclusive framework that the big four accounting are coming up with is going to be endorsed this month by what is the global international equivalent of the Business Roundtable. It's called the IBC, International Business Council. It's the 130 largest global companies, and they're all going to adopt this new unified 21 metrics that the big four accounting firms have come together on. So it will be market driven. The biggest companies in the world will adopt it. So I think that's going to speed up getting a consistent regulatory oversightable, that's not a word, but a framework that the regulators can do oversight on. And so I think we'll see it happen pretty soon.
That's great. Well, thank you so much for your time. You're always so insightful. Best wishes to you for a healthy 2021. And with that, thanks NASDAQ followers for tuning in, and until next time.
Great to be with you, Karen.